Neobanks, also known as digital banks or virtual banks, are financial institutions that operate exclusively online without traditional physical branch networks. They are the offspring of the digital age, born out of a need for a more streamlined, accessible, and customer-friendly banking experience. The story of neobanks starts in the early 21st century, when the world was rapidly moving towards digitalization. Early adopters, primarily tech-savvy millennials, were keen to embrace this novel concept, as they found it more aligned with their fast-paced digital lifestyles. The roots of neobanks can be traced back to the aftermath of the 2008 financial crisis. The economic turmoil that ensued revealed numerous flaws within the traditional banking system, prompting a reevaluation of how banking could and should work. Neobanks emerged as a response to these challenges. They were designed to address some of the most pressing issues with traditional banks, such as high fees, lack of transparency, slow service, and poor customer experience. The creators of neobanks envisioned a banking system that puts the customer first, offering a more personalized, efficient, and cost-effective service. But why were neobanks created in the first place? Well, the answer lies in the growing dissatisfaction with traditional banks. Many people felt that these institutions were out of touch with their needs, prioritizing profits over customers. This sentiment was particularly strong among younger generations, who were more comfortable with technology and expected a higher level of service and convenience. The notion of banking without borders, without paperwork, and without waiting in long lines was appealing. It promised a banking experience that was not just convenient, but also more democratic, allowing people from all walks of life to access financial services that were previously out of their reach. So, neobanks were born out of a need for a more customer-centric banking experience. They promised to revolutionize the banking industry, offering a fresh, modern approach to managing money. And as we'll see in the upcoming segments, they've certainly made some significant strides towards achieving this goal. But like any innovation, they've also faced their share of challenges. Stay tuned to learn more about the rise, benefits, challenges, and future of neobanks. The rise of neobanks didn't happen overnight. It was a steady climb. This climb was fueled by a perfect storm of technological advancements, evolving consumer behaviors, and regulatory changes. Let's start with technology. The last decade has witnessed a digital revolution. Mobile computing, cloud technology, and data analytics have become the norm, providing fertile ground for the growth of neobanks. These digital banks leveraged technology to create user-friendly platforms, offering banking services with just a few taps on your smartphone. Now let's consider consumer behavior. The new generation of tech-savvy customers, often referred to as millennials and Gen Z, were hungry for convenience and speed. Traditional banking methods, with their paperwork and long queues, were no longer appealing. Neobanks, with their digital-only approach, filled this gap, offering a seamless banking experience that catered to the digital native. Regulatory changes also played a significant role. In the past, stringent regulations made it challenging for new players to enter the banking sector. However, changes in policies around the world have started to open doors for these digital disruptors. For instance, the introduction of challenger bank licenses in the UK allowed neobanks to operate, sparking a wave of innovation in the finance sector. Several neobanks have risen to prominence during this period. Take Monzo and Starling Bank in the UK, or Chime and Vero Money in the US, for example. These neobanks have attracted millions of customers with their convenient and user-friendly services, demonstrating the potential of this new banking model. As we can see, the growth of neobanks is intertwined with the digital revolution and changing consumer expectations. This has led to a banking landscape that is more competitive, innovative, and customer-centric than ever before. Now, why are neobanks becoming so popular? It's all about the benefits they offer. For starters, let's talk about convenience. Neobanks operate solely online, which means you can carry out all your banking needs right from your smartphone, be it money transfers, bill payments, or even applying for a loan. Gone are the days of standing in long queues at the bank. With neobanks, it's like having your bank in your pocket. Next up, lower fees. Traditional banks have a long list of fees, from maintenance charges to ATM fees. Neobanks, on the other hand, have significantly reduced these costs. Some even offer zero-fee banking, making it a more affordable option for many. Better user experience is another major advantage of neobanks. They are designed with the customer in mind, offering intuitive interfaces and easy-to-use features that make banking a breeze. For instance, you can instantly block your card if it's lost, or set up automatic savings with just a few taps. But that's not all. Neobanks are also known for their innovative services, often providing unique features that traditional banks lack. Features like budgeting tools, real-time transaction alerts, and even cryptocurrency trading are becoming increasingly common. Lastly, let's not forget about inclusivity. Neobanks are making financial services more accessible to a wider group of people. Whether you're a freelancer looking for a business account or someone with a low credit score trying to build financial health, there's a neobank out there catering to your specific needs. To illustrate, consider a neobank like Chime that offers fee-free overdraft up to $200, a feature particularly beneficial for those living paycheck to paycheck. Or take the example of Monzo that provides real-time spending notifications, helping users to stay on top of their finances. In essence, neobanks are redefining what banking means for the digital age. Despite their success, neobanks also face significant challenges. Let's delve into some of the hurdles they have to navigate. One of the most significant is regulatory compliance. Neobanks operate in a financial sector that is heavily regulated, and these regulations vary from one region to another. Ensuring compliance can be a daunting task, as neobanks must keep abreast of the legal landscape, while also focusing on their innovative services. Then there's the issue of profitability. Many neobanks are yet to turn a profit, focusing instead on building their customer base and developing their technology. This is a common strategy among tech startups, but it's a risky one. Without a solid revenue stream, neobanks are reliant on investor funding, which can be unpredictable. And let's not forget about competition. Neobanks aren't just competing with each other. They're also up against traditional banks, who have the advantage of established customer bases and trust. These traditional banks aren't standing still either. Many are investing heavily in digital services to retain their customers and attract new ones. On top of this, other fintech companies are also vying for a piece of the financial services pie, adding yet another layer of competition. So how might these challenges impact the future growth of neobanks? Regulatory hurdles could slow their expansion into new markets. Struggles with profitability could make them vulnerable to economic downturns. And intense competition could make it harder for them to attract and retain customers. Despite these challenges, it's important to remember that neobanks are still relatively new players. They have the advantage of agility, which traditional banks often lack. They're able to quickly adapt to changing market conditions and customer demands. And their focus on innovation and customer experience is something that many consumers find appealing. The road ahead for neobanks is not without bumps, but the potential rewards are immense. So what does the future hold for neobanks? Well, the future for neobanks is as dynamic and innovative as the banks themselves. Current trends in the industry suggest a period of consolidation. This means that smaller, less successful neobanks may merge or be acquired by larger, more successful ones. This consolidation is expected to strengthen the neobanking industry, making it more robust and sustainable. At the same time, we're also seeing a growing trend of collaboration between neobanks and traditional banks. This partnership combines the agility, customer-centric approach, and digital prowess of neobanks with the regulatory expertise, trust, and operational scale of traditional banks. It's a win-win situation that could further drive the growth of neobanks. And then there's expansion. Neobanks are not content with just offering basic banking services. They're looking to expand into new areas like lending, insurance, and wealth management. This diversification could potentially make neobanks a one-stop shop for all financial needs. But the future of neobanks isn't just about trends. It's also about technology. Emerging technologies like artificial intelligence and blockchain could open up new possibilities for neobanks. They could use AI for personalized banking, fraud detection, and risk assessment. Blockchain, on the other hand, could be used for secure, transparent, and efficient transactions. The future of neobanks looks promising, but as with any industry, only time will tell.